It's Wednesday, the 15th of September, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The Reserve Bank Governor says interest rates are firmly on hold and expresses fears about the outlook for small and medium-sized businesses. That's our main story. Also coming up in today's podcast, the total number of COVID vaccines administered hits 23 million. House prices soared the most since official records began almost 20 years ago. And a corporate leader is charged with insider trading. Then stay listening for my chat to investor Roger Montgomery about whether there's another share market collapse in the offing. But first, here's a brief look at markets. Consumer prices in the United States, a key measure of inflation, moderated during July, supporting the case that recent price increases in the world's biggest economy are transitory. Whether the current bout of higher prices is transitory, reflecting COVID-related issues, or structural, meaning it's here to stay, is the key question driving global financial markets at the moment. Central banks around the world argue it's transitory, and it's a critical reason why interest rates remain low. The Bureau of Labour Statistics figures show that in August, consumer prices were up 5.3% from a year ago, though the jump from July to August was just 0.3%. It's the first sign that recent increases are abating. That was enough to trigger a sell-off on Wall Street. The S&P 500 was down 0.4% in early afternoon trading. The Dow Jones Industrial Average was off 0.7%, and the Nasdaq 100 was 0.1% lower. European markets were mixed, with the Stoxx Europe 600 flat, while London's FTSE was down 0.5%. The S&P ASX 200 finished up 0.2% yesterday, to 7,437 points, led higher by energy stocks. The utilities and real estate indices also did well, while technology and industrial stocks underperformed. All the major banks did okay, the miners were mixed, while the retailers were sold off. Oil prices were down a touch overnight after jumping earlier in the week. The price of gold rose back above $1,800 an ounce. The Aussie dollar is trading at 73.3 US cents, and iron ore prices tumbled further, hitting a 10-month low of under $124 a tonne. Steel production curbs in the Chinese province of Yunnan triggered the latest 5% fall. Beijing is trying to cap steel output at 2020 levels. Iron ore, of course, is the main ingredient in steelmaking. Reserve Bank Governor Philip Lowe has warned that small and medium-sized businesses are facing extremely difficult conditions in lockdown states, and the longer they have to wait for economies to reopen, the greater the damage will be. Dr. Lowe made it clear that the central bank still expects to wait until 2024 before it lifts the official cash rate. He also dampened speculation that tougher lending standards will be used to curb rising house prices. While Dr. Lowe said low interest rates were contributing to house price growth, it's better to address potential asset bubbles via structural means, such as tax and social security policy, planning and zoning, and other government spending initiatives. Dr. Lowe said many businesses were now in wait, survive and see mode. The economy is likely to contract by at least 2% during the current quarter and potentially much more. But the setback is temporary and growth will recover once higher vaccination rates are achieved and restrictions are eased. But Dr. Lowe warned that there is still plenty of uncertainty around how the pickup in growth will occur, particularly if some restrictions remain and, as expected, COVID continues to circulate after reopenings. Dr. Lowe pointed out that many young people were paying a particularly high price as a result of the pandemic, missing out on education, one-on-one connections, and flagpole events in their lives. This high price should be considered when conducting a full account of the costs of the pandemic and containment measures. The Reserve Bank last year changed its policy and now wants actual inflation, rather than forecast inflation, to be between 2 and 3% before lifting interest rates. Dr. Lowe yesterday said the bank wanted it well and truly in that range and unlikely to fall below it. And the economy needs more pressure on wages to achieve that pace. The country's chief economist has spoken. Rates are on hold, he isn't going to do anything about rising house prices, and most importantly and pointedly, keeping economies locked down has ramifications for the economy, for small and medium-sized businesses, and for young Australians. In a moment, the rest of the news you need to know this morning. In overseas news, the OECD overnight said global growth was moderating, albeit at above trend levels. The group's composite leading indicators now suggest the US and Japan will record stable growth in coming quarters. It comes as Bloomberg forecasts an economic slowdown in the United States, China and Germany. Chinese authorities have locked down the city of Xiamen in the southeast of the country after 12 new coronavirus cases were detected. The city has 4.5 million residents and is a manufacturing hub for electronic components. China's strict lockdowns have mostly been able to control COVID outbreaks so far. And in other COVID news, Russian President Vladimir Putin has been forced into isolation because of possible exposure to the virus. US President Joe Biden said federal employees must be vaccinated by November 22, and his administration is drafting rules requiring large companies to have their workforces inoculated or tested weekly. And the Netherlands will introduce a Corona Pass, allowing an easing of restrictions. Locally, more than 23 million COVID-19 vaccines have been delivered across the country, and from next month, many people will be able to receive vaccinations in their place of work. Australia is closing in on 70% of the population over the age of 16 having received one jab. Meanwhile, the mayors of Sydney's COVID-19 hotspots have met Premier Gladys Berejiklian to push for an end to strict lockdowns as vaccination rates rise. Some of the mayors believe there is no logical reason for their local government areas to still be under stricter lockdown conditions. And according to reports, the meeting was heated. New South Wales reported 1,127 new local coronavirus cases yesterday and 2 deaths. While the numbers remain high, they appear to have plateaued over the past 10 days. Almost 80% of the state's population has now received one dose of a vaccine and 46.5% are fully vaccinated. In Victoria, there were 445 cases reported yesterday and 2 deaths. The state will outline its reopening plan this weekend. The ACT recorded 22 new cases and has extended its lockdown for another 4 weeks, while Queensland reported 1 new case. Prime Minister Scott Morrison is heading to the United States for his first face-to-face meeting with US President Joe Biden next week, and climate change is on the agenda. Mr. Biden will host the first Leaders Summit of Quad, which includes the US, Australia, Japan and India. COVID-19, partnering on emerging technologies and cyberspace, and promoting a free and open Indo-Pacific are also on the agenda. Well, it's official. House prices are soaring. Residential property prices jumped 6.7% during the June quarter, the strongest quarterly growth since the Bureau of Statistics began keeping records back in 2003. All capital cities recorded rises, led by Canberra, which was up 8.2%, and Sydney, which was 8.1% higher. Hobart and Melbourne both recorded increases of more than 6%. Brisbane and Adelaide were both up around 5.5%. The mean price of a house in a capital city is now $835,000, though in Sydney it's over $1.1 million. The total value of housing across the nation is almost $9 trillion. Farmers are on track to deliver products worth about $73 billion this financial year, which would be a record, according to the latest forecast by the Australian Bureau of Agricultural and Resource Economics and Sciences, or ABARES. Favourable weather conditions, bumper harvests and higher prices for many commodities have overcome mice plagues and labour shortages. Crop production is expected to come in at a record $39.5 billion, with grains, cotton and sugar growers benefiting from higher prices, in large part due to poor weather conditions in Europe and North America. The quarterly report from ABARES upgraded the June forecast by 12%. That's the biggest jump in more than 20 years. The corporate regulator has charged former Vocus executive and current executive director of Unity Group, Vaughan Bowen, with insider trading over the sale of Vocus shares in 2019. The Australian Securities and Investments Commission launched action yesterday, and Mr. Bowen denies the charges. ASIC alleges Mr. Bowen sold shares when he knew that a takeover bid for Vocus was about to be pulled, and before the rest of the market was informed. Insider trading carries a maximum of 15 years jail, though it tends to be very difficult to prove. Buy Now Pay Later group Zipco is adding cryptocurrency trading functionality to its payment system, meaning merchants will be able to accept digital tokens such as Bitcoin for purchases. Zip USA's chief executive, Brad Lindenberg, said it was a shift into a range of products that comprised the millennial finance diet. Initially, the group's 15,500 US merchants will be able to use the cryptocurrency functionality if they choose. The Organisation for Economic Cooperation and Development, that's the OECD, has warned that Australia is too reliant on income tax and federal and state governments must respond to the ageing population. The Australia 2021 Economic Survey, to be released today, forecasts economic growth of 4% this year and 3.3% next year, but warns that risks and uncertainties remain. The report recommends either increasing the GST or broadening its base. BHP released its annual report yesterday, and it included a $5.3 billion figure for the cost of remediating its oil and gas fields. The cost of cleaning up unused oil and gas assets, be that at the end of their life or before then, is a major liability for energy companies and a potential hurdle in BHP's efforts to merge its oil and gas business with Woodside Petroleum. The merger is expected to happen in the first half of next year, the report says, and the remediation figure, which wasn't as high as some analysts had forecast, helped Woodside's share price close more than 6% higher yesterday. The report also provided more details about BHP's efforts to reduce carbon emissions. The big Australian will require suppliers to have net zero emissions by 2050, but won't impose a target on customers who buy its commodities, such as the giant steel mills in China. The miner also said half its revenue would come from future-facing industries such as copper, nickel and potash by 2030. Bramble's share price tumbled 12% yesterday after boss Graham Chipchase said he'd boost spending on digitising and modernising the pallets company, triggering a short-term hit to profits. Brambles has 12,000 staff and operates about 345 million pallets, crates and containers across 60 countries. They are used to transport food, beverages and grocery products, but somewhat surprisingly, given the nature of the group, it isn't fully digitised. Mr. Chipchase said the spend was necessary to boost performance beyond this financial year. Its share price recovered somewhat to close down 9%. It was easily the worst performer of the top 200 yesterday. And finally, a special mention to nickel explorer Metal Hawk. Its share price ended up 260% yesterday, taking its market capitalisation to more than $30 million, after it announced it had found, and I quote, a significant, massive sulfide mineralisation at the Commodore Nickel prospect 20 kilometres from Kalgoorlie. Nickel is among the hottest commodities in the world at the moment. If the find comes to fruition, and there's a long way to go, that would be a boon for Metal Hawk and its shareholders, of course. Up next is our daily interview, and I'm joined today by one of our regular guests, Roger Montgomery, founder and chief investment officer at Montgomery Investment Management. We're looking at how safe the share market is from a COVID-induced correction and what could potentially trigger a crash. We also talk about some of the big corporate deals taking place lately and what investors should consider when it comes to oil and gas. Plenty to discuss, so don't miss this one. Up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Wednesday, the 15th of September, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.